Hello, I'm Sheri Penner, Deloitte Private's tax leader for Canada. I am pleased to share with you the first in our series of videos addressing the federal government's proposals on tax planning using private corporations. On July 18th, Finance Minister Bill Morneau launched a consultation with a series of proposals to address three areas of concern. These changes are significant and broad sweeping. If enacted, they will affect almost all private business owners in Canada. The areas addressed are income sprinkling, passive investment income, and capital gains. It is the government's position that these areas of tax planning are being used to gain unfair tax advantages. The first of these issues, income sprinkling, typically occurs when dividends are paid from a private corporation to individuals, either directly or through a trust, to recipients who have low levels of other income. This results in the overall tax paid on all income distributed being lower than it would be if the amount were paid only to a high-income earner. The recipients could include adult children still in school or a spouse who is not earning significant other income. The government's proposed change would apply a new reasonableness test applicable to payments made beginning in 2018. This significant approach could affect the way private business owners extract their corporate earnings in the future. Given the impact and timing of these proposals, we encourage you to discuss any compensation and dividend payments with your Deloitte advisor before the end of 2017 to optimize the overall structure of these payments before any changes take effect. The second issue raised by the Department of Finance addresses the government's concerns over corporate business owners investing low tax earnings inside their corporations through passive investment portfolios, rather than reinvesting these earnings in the business or paying them out to the shareholders at a higher rate of tax. This common practice, which is supported by the current regime of tax integration, allows business owners to invest more after-tax dollars up front, resulting in a deferral of personal taxes until such time as the money is needed for personal expenses. Although there is no draft legislation yet, options noted to curtail this advantage could include the elimination of refundable taxes on investment income and the potential elimination of additions to the capital dividend account for the non-taxable portion of capital gains realized from these sources of income. The third issue addressed by Finance relates to planning, used to generate capital gains within a related group through the sale of assets. This practice has historically allowed shareholders to extract cash at lower tax rates using the capital dividend account tax laws. Proposed legislation would eliminate the tax advantages of these transactions and may even affect other asset sale transactions as a result of the broad wording of the proposed provisions. As currently worded, these rules apply as of July 18, 2017, the date that the proposals were released, and may cover current, future, and even historical transactions involving the sale of any corporate asset. Due to the immediate impact and broad sweeping nature of the proposed legislation, we would encourage anyone who is conducting or considering a corporate sale of assets to consult with a Deloitte tax professional. Likewise, because of the significant tax impact of the possible changes to a capital dividend account entitlement, we also advise any corporation contemplating the payment of a capital dividend to discuss the impact of these changes with their Deloitte tax advisor before making any distributions. In the coming months, as we approach the proposed implementation of many of these changes, we will periodically release additional videos or publications that will provide deeper insight into the various proposals and their overall implications to you, our clients. We look forward to working with you to understand and address the consequences of the changes, as well as the business opportunities that will result. Thank you for listening.